All right, yeah, everyone. My name is Raquel Black. I am the co-working manager for for Change Labs here on Navajo. And I am a member of the Navajo Nation. I am Kia'ani, born for Sanjakine. My Che's are Ashinhe and my Nellies are Totochini. Thank you for taking the time to be here with us today. First off, I'd like to give a brief introduction of Change Labs, and for those who aren't already familiar with who we are or what we do. Officially, Change Labs is a Native-led and Native-controlled nonprofit organization based on the Navajo and Hopi nations. Our goal and mission is to provide creative workspace tools, resources, and knowledge for Native entrepreneurs. For those of you in or near Tuba City, Arizona, you may have been aware of our co-working studio over at the Moenkopi Legacy Inn campus for the past 3 years. That space is currently not open anymore, but the construction of our new headquarters, which is going to be located right next to Tuba City Chapter House on Main Street, is currently underway. I should have added pictures of our construction. I keep forgetting to do that. Starting as early as this winter, I believe the most recent update was 5 to 6 weeks that we'll have construction completed. We'll have a brand new co-working space available for you. And some of the services that we'll be able to offer to our local entrepreneurs are some tools that would be useful to you operating and running your business, such as desk-based Wi-Fi access, color printing, in-person coaching sessions, and many more. It's a working list, so any entrepreneurs or local business owners are definitely free to let us know what kind of assistance you're needing as far as what we have available in the co-working space. Our list is constantly being updated. And then here at the headquarters, we're always open to new ideas on how we can better serve our communities. We're really excited to bring this community space for everyone to help with building and growing your businesses. So please stay tuned for more updates. And if you like to, we do have a lot of information posted already to our social medias. So check out those pages. You can look up nativestartup.org, or you can look us up as Change Labs. One of the most popular questions we get here at Change Labs is, how do I start a business? All of our programs and services here, including the co-working space, are designed to help our Native entrepreneurs, our artisans, our change makers, and our vendors all alike to both start up and strengthen their businesses. So if this is a question that you have, my next few slides are for you. One program we have available is the Business Incubator Program. It's one of the only Native-led business incubators for Native entrepreneurs in the United States, and it's right here in Northern Arizona. This program is being led by our Director of Business Incubation, Jessica Thago, and it is currently being turned over to our awesome Cecilia. I forget her name now. I'm sorry, so sorry, Cecilia. And it's a 12-month program for Native entrepreneurs who want support and training on how to start and operate your business on the Navajo and Hopi nations. Change Labs will be accepting applications for the next round of entrepreneurs very soon. And if you're interested or would like assistance with your logo or website design, your bookkeeping and finances, please check out our website for more information at nativestartup.org/incubator. Next is another question we get often: how do I get help running my business? There's so many aspects to being an entrepreneur, and the answer or solution that you may be searching for may not always be obvious. So here at Change Labs, one of our driving factors is building kinship, establishing relationships among our communities and nations. And how Change Labs can help here is through our business coaching appointments. We offer free virtual 90-minute appointments with any of our business coaches. Our coaches are available on Mondays from 11 a.m. to 5 p.m., and they each have their own area of expertise, depending on the kind of support you're looking for. We have a team of very, very bright and eager coaches, such as Jessica Stago, our director of the Business Incubator, Christine Laughter, the director of our Kinship Lending Program, our finance director, Marcia Grayaz, and a few of our other coaches are Cecilia So, that's her last name, Tim Deal, and Joe Elliott Nez. They are each incredibly knowledgeable in their specialties and will be able to help you and assist you where you're needing help with your business. They're able to assist in areas like marketing to accounting and bookkeeping systems, or if you're just starting out, they can help you with your business model or navigating the Navajo Nation systems for things such as your business site lease or registering with the Navajo Nation Business Regulatory. You can find information or book your appointments with one of the coaches here at the link, nativestartup.org/events. Another common question we get here at Change Labs is, how do I create a website? Until Change Labs can go back to hosting open studio hours at our headquarters in Tuba City, I will refer you to our YouTube channel. We currently have over 40 recorded sessions and discussions, each designed for Native entrepreneurs and business owners alike, all led by other Native entrepreneurs and creatives. Our workshops have covered topics like social media marketing, website design, doing business on the Navajo Nation, and many more. It's a growing archive of shared knowledge from other Natives who really want to see our Native people and their businesses thrive. To access many of our past sessions and our listings of resources such as grants and other informational events, I'll also refer you to our link here, nativestartup.org/resources. We update this page pretty regularly, and so be sure to check in every now and then for upcoming opportunities. Another great resource we have are our social media platforms. We are on Facebook, Instagram, LinkedIn, and Twitter. I do recommend that you check out those pages for regular postings and updates as well. Change Labs likes to share posts from many of our partners and others in our network for great opportunities and resources that we think would be useful to our Native creatives, our Native business owners, and our Native entrepreneurs. And lastly, there is a whole spectrum of who are considered Native entrepreneurs. And we here at Change Labs have been curating our own list of them. If you're in the market for finding other Native service providers who can help you with your business, we currently have over 600 Native-owned businesses listed in here that we think are really, really great resources for helping to start up or run your business. Or maybe you're just searching for some Native-made products. You can find the listing here at resrising.org. And if you are a Native business owner or entrepreneur and you have services or products that you would like to promote, feel free to add yourself on there onto the listing. It's free and it's a pretty simple process. All right. If you have any questions at all about Change Labs or are interested in any of our services, we would like to know where to start with any of our services, feel free to email me. My direct email is here, raquel@nativestartup.org. And now, before we start with our guest speakers for today, I want to touch base on workshop etiquette and how we can be respectful of our guest time today. Veronica and Desmond did let me know that they are open to any questions. So feel free to raise your hand, the little raise hand emoji, or type your questions into the chat box, and we'll be sure to get to them before we end our session today. And then another reminder, our session is being recorded today and will be available on Change Lab's YouTube channel later this week. So if you get cut out or if you have to leave early for any type of reason, check out our YouTube channel and this recording will be there. All right. And now finally, introducing our guests for today. We have Veronica R. Lane and Desmond Bruguier. I hope I pronounced that correctly. Veronica is Vice President and Business Development Officer at Native American Bank. She is the Tribal Housing Specialist for the bank and a member of the NAB marketing team. Veronica is a graduate of Fort Lewis College with a bachelor's in accounting and a minor in small business management and entrepreneurship. She is also a graduate of the University of Denver with a master's of business administration with a finance concentration. Veronica is Diné and currently from Tolucay, New Mexico, but currently resides in Denver, Colorado. Desmond, our other guest here, Desmond Bruguier, is a commercial lender for Native American Bank and a member of the Bank Deposit Committee. Desmond graduated from the Zicklin School of Business at CUNY Baruch in New York with a bachelor's in finance. I looked up Baruch and I tried to figure out the pronunciation, so I'm sorry if I butchered that. He is currently an MBA candidate at Leeds School of Business at the University of Colorado Boulder. Desmond is a member of the, I'm so sorry, Assiniboine. Okay, I'm gonna let you say that. I'm so sorry.
No problem. I'm sorry. I apologize for all these difficult words. So the last name is Bruguier, like New Year, but with the B. Right. So Bruguier, Baruch is how they pronounce it, and Assiniboine and Sioux are the two tribes. Yeah.
Awesome. Thank you so much for that. And I'm so sorry for mispronouncing
all these French words.
Yeah. It's too much for my res tongue right now. And then he's also from Fort Peck, Montana, and is a U.S. Navy veteran. And now I'd like to turn our time and our attention over to our guests, Veronica and Desmond. Thank you so much for being here. I'm going to turn it over to you, and you can take over the screen.
Thank you so much, Raquel. Thank you very much, Raquel, for that introduction and for going over all of the great work that Change Lab does. I have been a fan of Change Lab for a few years now. I actually did a panel presentation like way back in the day. I want to say it was maybe like 6 years ago when an event was held at UNM Gallup. So it's really great to see the growth of the organization and continuing to support from afar and participate as much as we can on behalf of the bank. So thank you for asking us to be a part of the series that you're conducting. I think it's really great information and super beneficial to small business owners, Native entrepreneurs, and just anyone who is interested in learning more about banking and obtaining credit, because I feel like, that's a really a specialized area of expertise. And so that's why Des and I are here today. I'm pretty sure for some of the, attendees, when you go into a bank, or because you're a Native owned business, or your business is located on the res, or you do a lot of business on the res, if you've ever gone into a traditional bank, on one of the border towns or ones that are located on res, you might feel very overwhelmed, or they might tell you you actually can't get a loan because you don't have any collateral, you don't have any real estate, because you work from a business site lease. That can all be a little convoluted, and Des and I are here to tell you that's not the case. We're here to also explain a little bit more from the banker's perspective on what actually happens when you go and apply for a loan with a bank. So we are here to help demystify everything that you may have questions about banking. Des and I are both just two little Native kids who left the res and moved to the city to work for a bank. So we are not your, Des looks real professional right now because he's actually in the office today and I'm working from home. So don't let that fool you. We're both just little res kids out here talking about banking stuff. So like Raquel said, please interrupt us on the fly. We really want this to be just an open, casual discussion. Don't really want to use a lot of banking terms or financing lingo. If we do, hopefully we'll explain. And then if we don't, please call us out and let us know, and we'll be happy to answer. Okay, so this slide is a little bit mute, but as far as I can give a little bit more of an introduction for myself. Yat e Veronica Lane Yinishia, sit na jini nishlon, be patwani bashashin, tot uja dashiche, glizaflana dashinella. And as Raquel noted, I am originally born and raised from the Totlagai area on the New Mexico side of the res, from the Bajaskla or the Twin Lakes chapter. I've been at the bank for over 7 years now, almost 8 years, and have been on the credit side of banking. So I was an underwriter when I first came here, and then switched over to the lending side, which is what Des and I do now. And it's a lot of business development work and generating leads and looking for small business owners who are interested in applying for loans with us. Prior to coming to the bank, I just worked in corporate America outside of Indian country. So really excited and happy to be working, for all of our people across the nation. And I'll let Des go ahead and give his intro as well.
Hey, this one making me my res accent come out now. All right. Ihanawash Day. I'm a lot less tradish. Good morning, everyone. I'm glad everybody could be here today. First, I just wanted to say it's a big honor for me to be able to be here to share some of the knowledge that I've gained, some of the experience that we've come across, and to kind of help build this bridge together with everyone, Native entrepreneurs, Native business owners, and just Native Americans in general. We could use a lot of support from each other, and I'm glad that this platform exists for us to do that, and I'm glad to be part of it, and thank you all for being here. My name is Desmond Bruguier. Again, that's like New Year, but with the B, Bruguier. As we mentioned earlier, I'm a Assiniboine Sioux from the Fort Peck Reservation. That's in northeastern Montana. It's up kind of next to North Dakota and Canada. I don't know if you guys have ever been there. It's the Great Plains, as you can see behind me. A lot of the flat land up there. That's why we're so tall. You got to see long, far away. Just kidding. We just wanted to take some time to try to explain some of these things that can be a little bit confusing and a little bit mystifying about like what happens at a bank in the background, especially when you're applying for credit.
Perfect. So as we both mentioned, said it multiple times, we're both here from Native American Bank, and our holding company is Native American Bank Corporation. Our headquarters are located in Denver. We also have a branch location in Denver. It's just south of downtown. And this photo on the screen right here is actually a photo of our corporate headquarters. So if you're ever in the Denver area driving down South Broadway, you'll see us right on the corner of 2nd and Broadway. We welcome you to come in, take a look around, ask questions, open a personal checking account. We're always happy to bank new Native customers. So a little bit about the bank as far as how we were formed. What Des and I are going to do now, we're just going to give you some really high level information about the bank, let you all know what we do at NAB, and then we'll get into the meat of the presentation. So our bank was really formed to be mission driven. We were created by our original founders to be a Native bank, a bank that was owned by Natives, ran by Natives, and supporting Natives throughout the country. So we originated out of Blackfeet, which is on the Blackfeet Reservation, which is in Browning, Montana. It's very, very north Montana, like 20 miles south of the Canadian border. One of our primary founders who really led the initiative to establish NAB was the late Eloise Cobell. So she's very instrumental in the founding of our bank and our history. And we actually have our conference room in the Denver office named in her honor. We're also a Native Community Development Financial Institution. Did I say that right? Yes, that's a CDFI is what we usually call these organizations. A lot of Native CDFIs are organized as nonprofits, and they also do a little bit of commercial lending. They're not regulated like we are because we are also a federally regulated bank. So we carry FDIC insurance, so we're just like any other major bank out there. Even though we are Native, have a Native mission, a Native focus, you don't have to be Native to bank with us. So we have a lot of non-Native depositors. We provide commercial lending to non-Native business owners. So it's our primary focus, but it's not a requirement to be a customer of ours.
Great. Yeah. Here's a little bit more about kind of the background of the bank. And I'll just try to keep things pretty high level. So back in 2001, 20 tribal nations and Alaska Native corporations, they set out with this dream to create a national bank to serve all Native people. And they established Native American Bank, and they viewed the absence of access to financial capital and services as a significant obstacle towards the realization of self-sufficiency and financial freedom across Indian country. So since then, our shareholders have grown from 20 to 36, where 31 of those are Native entities, and the other 5 non-Native shareholders are nonprofit organizations who do support our mission. And our mission, like Veronica mentioned earlier, is to assist Native American and Alaska Native individuals, enterprises, and governments to reach their goals by providing affordable and flexible banking and financial services. Currently, you can see on the screen, our asset size is a little bit over 230 million. And our bank is made up of, staffed by more than 50% of Native members that are representing different tribes. We currently have 2 full-service branches, one here in Denver, which is also our headquarters is located there as well. And then we have our flagship branch, which is up in Browning, Montana, again, as Veronica mentioned earlier. Next slide. And here's just kind of a graphical representation of where our shareholders are kind of located across the country. So you can see that we have, quite a diverse mix of different Native entities that are shareholders and owners of the bank here. And as you probably already noticed, Navajo Nation is a shareholder, which technically means that we are a Navajo-owned bank.
So I'll just go ahead and briefly talk about on the commercial lending side. This is sort of a map of where all of our lending is based to. As I mentioned earlier, we do commercial lending nationwide since we are chartered nationally. So you'll see we have loans up in Alaska all the way down to Florida and pretty much everywhere in between. We also have a pretty large concentration of our portfolio, and I apologize if this is a little bit difficult to read. I know the color of the font is not as bright, but in California, we have 21 or $29 million loans outstanding, and these values are as of the end of 2021. You'll see another major concentration is actually in Arizona at almost $12 million of our portfolio. So I know a majority of those loans in Arizona are to the Navajo enterprises, other tribal enterprises, and to Navajo business owners. So I just wanted to give you a really quick representation of what we do. One thing I do want to note is we actually don't do personal lending nationwide. So unfortunately, because of federal regulations, we're only able to do personal loans if you're a resident in the states of Colorado or Montana, because those are the states in which we have a physical location.
All right, again, just a little bit more. Since our inception, we have deployed just under $260 million in loans. And over half of those loans have been on reservations or tribal statistical areas. Now, a tribal statistical area is an area that has like high Native population concentration. And like, for example, these could be like the states of Oklahoma, the whole state of Alaska, or even, I believe, the city of Albuquerque. Right? Another thing we can see is that our housing units, although we currently don't offer any personal mortgage or like 184 lending products, we do hope to do that again at some point in the future. But that housing unit statistic that we see here is, mainly it's Veronica's work, who's our tribal housing specialist. But this is working directly with tribes or tribal housing authorities. And then lastly, I just wanted to point out that, it says currently like 90% of our commercial lending portfolio is in Indian country. So this is important to just kind of iterate that, as Veronica did mention earlier, that our origins are Native. We are Native led through our shareholders. We are Native staffed through the staff here, and our mission is Native focused. So we're really a very, Native focused entity here.
All right, so that kind of covers just a little bit of the background information on the bank, what we do, what Des and I do, what our team does here, both in Denver and in Browning. So now we're going to get really into the presentation of what you all are here for and what we want to talk about. So the first thing we want to kind of start off with this discussion is, as a small business owner, as a person who's looking to start a business, when does it make sense to get a loan? Because sometimes that's just not really clear. And a lot of the times with small business owners and native business owners in general, they tend to be really a little bit more debt averse. They're like, no, that's too risky. That's too scary. I don't want to do that. But there really are situations where it makes the best sense for you to take on to finance things. And so we're going to talk a little bit more to start that conversation. So why debt? There are several reasons as to why it makes sense to take on debt, to get a loan, to apply for a loan, especially when you're a small business operator. And there are three little buckets that we thought made the most sense that we could highlight. And one of the primary reasons is to fund growth. If you're started out as a one-person operation and now you're doing really well and you need to grow your business, really taking on debt is leveraging other funds outside of your own business to get that done. And that usually makes the most sense because then you can, retain all of the cash and the liquidity. Liquidity just means the cash or liquid assets you have on hand to really help you keep your balance sheet as a strength for your business, instead of depleting all of that cash to buy things cash outright. And then, you're having to build it back up again. And then you can buy something else. Whereas with financing those purchases, you're able to keep that cash on hand. And then the impact to that cash is just the monthly payments that you'll make on whatever you're financing. So funding growth can be seen in a couple of lights. So working capital. Working capital, there are two forms of working capital. It's just plain working capital or permanent working capital. Permanent working capital just means it's going to act more like a long-term, several year term loan. And working capital can be used to hire employees. So let's say you're going to grow and you want to hire 2 new employees, but obviously you don't have those new employees generating the cash flow that they will bring on when they're first hired. So you're kind of starting at a deficit because you're going to be paying someone's salaries and they're not really bringing in the income yet, but they will be eventually in a few months. So if you were to finance that, you could get a working capital loan, say, let's say for 3 months of their salaries. And then you would use that loan to pay their salaries for those 3 months under the impression that at the end of that time, they will be then generating cash flow and sales in your business, which will then trickle down to pay for their own salaries to generate, additional net income. So that's kind of an example of when you would finance working capital. You could always fund growth if your business needed to expand and you needed more equipment or you needed to update equipment. Funding that, because it can be such a large purchase, really makes the most sense is to, not depleting your cash on hand. And then if you're a larger company or getting quite large, then obviously funding growth is if you're acquiring a new business, if you're purchasing real estate, let's say you're operating out of a home office and now you want to lease or purchase an actual location. So those are funding growth options, and they really make the most sense in most cases to take on debt to do that growth. And then the next thing is to improve cash flow. So improving cash flow is literally just related to everything I just said. So you're leveraging outside funds, meaning you're just not using your own funds to make these purchases, to do this, to do everything you want to do. You retain cash on your balance sheet because having a strong balance sheet is really important, especially for small businesses. And then streamlining operations. Just not having the huge swings of, depleting all of your cash and then having to build it back up. Taking on debt can really help smooth out that process for you. And then another thing we see quite a bit too is for small business owners who do a lot of contract work is using a line of credit, a revolving line of credit for contract mobilization. And that just means if you win a contract, you have to utilize the funds you have on hand because you're getting reimbursed at the back end. So really, having a line of credit to mobilize those contracts will also help streamline your operations. And the last thing that we thought to mention would be to retain ownership. If you're asking for funds, debt can be cheaper can be a cheap form of equity if you want to retain all of the ownership of your business. So instead of having someone come in and like say, hey, I want to buy 20% of the company if I give you this much money, that really depletes the ownership decisions that you might want to retain. So, financing can help eliminate that if you're wanting to do that. And then, taking on debt it's easy to predict the payments. Once you have that loan in hand, you'll have the debt schedule, and it'll tell you every single month, this is the amount of your payment, and it's going to last for this long. And you can always, pay that down earlier if you don't have to take it out for the full year, the full 6 years or 10 years or whatever. So that's really another benefit. And then the other thing too is having flexible options when you're taking out debt is, really having the discussion with the lender about what it is you want to do, working together to make sure that everything that they're structuring for the loan works for you, works for your business, and also works for the lender. But the next slide we're going to talk about, so that kind of covers when it makes sense to take on debt. So now Des and I are going to talk a lot about what do you expect when you're applying for credit? What does that entail? What's the process? What does it look for us? How does it look for you? So in this next section, this is what we'll chat about. So everything that we do on our end and that you'll go through as a borrower when you're applying for a loan is going to follow a loan application cycle. This is just really a visual of how that works. So the first step is application intake, meaning you'll contact Des and I, and then we'll talk about, what you're kind of looking for, what you're looking to finance. And then if we deem that it's actually an application we can proceed with, we'll send you our application and our checklist. And then you'll just look at that, complete everything, send all the documents to us, and then it'll move to the information collection stage. That's just where Des and I are reviewing the application. We'll next go into questions and clarifications, meaning it's just going to be a dialogue between us and you about your business, about questions we have and that we form during step 2. And then once we have everything clarified and answered and we feel comfortable with proceeding with the application, then it goes into a loan decision process. And that's really on our end, the bank's end. What does that look like? What does that trigger, and where does it go from there?
All right, so we're going to take a minute and kind of break down that cycle again and just kind of get a little bit more into what's actually happening there. So the application intake phase, that's the first step in this loan process, right? You've already determined that, hey, I could use some financing for my next business venture, my next purchase, my next acquisition, whatever it may be. And you call up a bank, you call up Native American Bank, and we kind of discuss hey, I think that I would like to move forward with applying for a loan. And so we would send you an application, and this is kind of kicks off this whole application cycle. Now, there's going to be something I'm going to try to echo throughout this time when on some of these points, and something that I think is just very important because we see it quite often is just keeping your company info up to date. Right. I mean, it sounds simple enough, but I know that, business owners got a lot going on, so it's kind of hard sometimes. But if you can just make it a point to keep your company info up to date, we're talking your tax returns, your tribal or your state filings, your financial statements. These types of things are important to just have kind of on the ready, especially if you're going to look for any kind of financing, even if it's not debt financing, even if it's equity financing, or even I assume if you're applying for grants, they're going to want to see a lot of this information anyhow. And so keeping that up to date is going to be important for streamlining this whole process, right? It makes it easier on you, and it makes it easier on who's looking into and at your business. I also want to empower you, even at this point, in this stage, to ask your lender questions, right? Ask them to explain anything that you may be unsure of, or maybe need to be clarified or confused about. This whole thing is a building of a relationship between, between the two institutions, right? Between a bank and yourself, a bank and your business. And so feeling comfortable enough to say, hey, can you explain this again? Or I wasn't clear about what this meant, or something like that. Please take that upon yourself to feel empowered to do so.
Yeah, so during the information collection phase or time of the application, it's really where Des and I will go in. We'll take a look at your financial statements for the past 3 years. We'll take a look to make sure that your tax returns are filed and you're current with the IRS, that you don't have any taxes outstanding, tax liens. We'll make sure that you're still current and in good standing with the state if you're state registered, or if you're only registered with the tribe, we'll make sure that you're in good standing, or the business is in good standing with the tribe as well. And it's really during this period that we're doing our due diligence to make sure that the business itself is in good standing, and that we're taking a look at the operations, like the history. You as a business owner, how well are you operating the business? It's always, so I feel like people are always surprised on what reviewing financial statements can tell you about a small business owner. We can tell if you're not ordering inventory on time, if you're depleting your cash too much, if your business is a seasonal or a cyclical. We can figure all of that out just by reading financial statements. And I guess I also want to just reinforce, the better you are at understanding financial statements, knowing how it works, knowing what information is relayed with that information, it'd be really a powerful tool for small business owners. I know that all of you are, immersed in your craft, in your business, in your industry, but really taking the time to understand the financial statement or finance aspect of your business will just really be helpful and improve your understanding leaps and bounds as well, because we are going to be the ones asking you these questions. And it's usually, you or your accountant will have to explain certain things to us during this phase. We're really just doing a lot of the credit worthiness, making sure that your business can service the debt you're taking on, and really having that kind of review in this stage of the application cycle.
Perfect. Which will move us on to the questions and clarification stage, right? So as Veronica was saying, after we analyze all of the documents they've given us, we've kind of assessed all of the business operations and stuff. We are going to probably come back with some clarifying questions to just kind of really make sure that we round out this picture of you and your business, right? As I mentioned earlier, this process is a relationship. So it might seem sometimes that we're kind of maybe being intrusive, or we're asking really direct questions about your business, or perhaps even your personal information, something, if you explain something on your tax returns to us or something like that, right? But these are requirements that any especially federally regulated financial institution needs to adhere to, because we have compliance and regulations and policies that we have to uphold as well. So there are some things that we do need answers to, so that we can make sure that we're also adhering to what the bank is requiring. But so this might mean that we are asking some pointed questions, such as what happened in this year? As we all know and aware, 2020 was kind of a roller coaster year for a lot of different businesses. Even though that we know, that a lot of businesses were affected harshly by COVID, we still might need you to explain that to us, because we can't go and make assumptions for you. So we may say, hey, can you explain what happened in this year? Or maybe you have a past due payment on a credit history or something. And we may ask you, what happened on this past due payment? So these questions, I want you to think that they're not negative by nature. We're not looking for reasons to disqualify people. We're not trying to, make it more difficult for people. We just need to have answers to these questions so that, again, we can build this complete picture of you and your business. And so there are, one-off scenarios, there are unique circumstances that everybody does encounter or something like that. If those do happen, it is good practice, especially starting out at your business, to just kind of make note of significant things like that. So if these questions do come up, you can have an answer for them right away. You don't want to have to spend, a day or days going back, looking up your past records, trying to understand what happened at some point in your business, 2 or 3 years ago. So, keeping note of those things is a good practice to kind of get into the habit of. And then last would be our loan decision.
Perfect. Yeah. And I also want to just note too, a lot of this process is very standard. It's not just specific to NAB. It's really standard across a lot of financial institutions, whether it's a normal bank like us, whether it's a CDFI that you're going to, they're all going to follow this general process. CDFIs might be a little bit more lenient on accepting, severe past due payments or a lot of late payments. Their policies are a little bit different, but generally this process is the same for everybody. So now moving on to the last stage of the cycle is, once we have all of our questions answered, everything's clarified, and we feel, that we've really built a strong case to have the loan approved, we actually, Des and I, will go and present this loan for approval to our credit committee. So every institution has their own credit committee. It's usually comprised of board members, and we have to go and advocate to ask their approval for us to provide this loan to a business. Our credit committees are held ad hoc, so whenever we need to present something to them, we'll call a meeting. And it's really us just advocating on behalf of the business owner as to why this loan should be approved. Once we get that approval, then it starts triggering like the loan closing process, or if we're going to utilize a government guarantee program, which we're going to talk about in a little bit, it triggers that process because a lot of the government guarantee programs require the banks to get their approval first before we can go then and apply on your behalf to that government guarantee agency. If we weren't using a guarantee agency, then this would trigger starting the closing process, meaning we would start generating our loan documents, we would get that final, we would set a closing date, and then we would get you, all the loan documents for signing, figure out how we're going to disperse the funds to you and your business. And that would be sort of the last step in the application process, but it's really just the next step in a long-term relationship that we'll have over the life of your loan. Because our communication back and forth, or your communication back and forth with your lender, doesn't stop there. There are things that we'll require on a quarterly basis, like quarterly financial statements, annual financial statements, annual audits if they're applicable, your annual tax returns. So it's just a long-term relationship that will continue for the life of the loan.
All right. Well, we'll just keep marching on then. All right, so we know that as entrepreneurs and business owners, you have a lot going on. You're out there generating leads, you're acquiring inventory, making sales, paying suppliers, and that's not even mentioning like your home lives as well. So we understand, and we are very empathetic to all of the pressures that you are dealing with on a daily basis. And so that's why, again, I will echo this point one more time, and probably again after that, but it's important to keep your company information up to date, right? This can save you a lot of headaches and valuable time, right, in the future, especially like when you need financing, like when it does come to a point where you're just like, oh man, you know what, I just got a huge order in and I need to scale up my operations, but I have a short time to do it. You don't want to have to be trying to gather all this information, make sure things are up to date, refile some paperwork, especially if it's with the state or something like that. That takes time. You don't want to be caught in those situations because those are eating up a lot of time. They're eating up your time and your energy. So like if you can just keep these things up to date, it saves a lot of this holdups, I guess, or roadblocks or barriers, right? But another thing too is, as other financial institutions or investors are going to be asking for this information as well, right? Veronica was saying that earlier, that even CDFIs and things like that, they're going to be looking for these same types of documents. So having them ready and up to date and things like that makes it real simple to just kind of dive into the conversations about what you need and when you need it for your business, right? So a couple of things that we just kind of want to look at is historical financial statements. So typically we want to look at 3 years of historical financial statements. Being new businesses, sometimes you don't have that full 3 years of operating history, and that's fine. That's a consideration that the bank will make if that is the fact of the matter. But generally, we would like to see 3 years of historical financial statements. And that goes the same for the tax returns as well. So that'd be for your business and your personal tax returns. We're going to try to look at the past 3 years of those as well. And then business formation documents. And I kind of touched a little bit on those earlier. Those are going to be like your articles of incorporation or articles of formation, your operating bylaws, your operating agreement, or your good standing with the state. So all of those documents we would require and want to see as well. And then a business plan. So a business plan is going to be important, and this is for a couple of reasons, right? One, first, it shows that this is your investment into your business, right? Like, you've done the work, you do know the understanding of your business. And this also gives others insight into your industry. It explains your plans for the future of your business, and also like what your goals are and what you plan on achieving. And it helps present like a strong visual of your business as a whole. So a good business plan or a strong business plan definitely tells a good, strong story, right? And then projections or pro formas. So pro formas or projections is generally a requirement for like 3 years of your financial statements projected into the future, right? So I know that these can be difficult to construct, especially as a growing business. It's kind of hard to say, oh, I'm gonna look into this crystal ball and I'm going to be doing so much business in the future, and that's hard. But it's important to know that you also just can't throw numbers in there, right? You can't just say, oh, I'm going to be doubling my business every year for the next 3 years, right? I mean, it's definitely possible. I'm not saying it's not possible, but other people who are going to be looking at these statements and things like that are going to, kind of, I wouldn't say scrutinize, but they understand how businesses life cycles kind of operate, and what to kind of look for as when these projections are coming up or when they're presented.
Hey, Des, I just wanted to also just make one note too regarding the financial statements. Des talked about the last 3 years, but we will ask for the most recent year-to-date financial statements too. So that's also a really important note to make note of, is just because keeping your books as current as possible usually will mean like giving us this year's information, even though like it's not, the year hasn't ended. Usually financial institutions will ask for the most recent quarter end. So right now we're in the middle of October. Everyone who has a small business should have completed their financials up through September 30th. So that's also just one little thing I wanted to make note of, that we'll all ask for that information too.
Yeah, great point. So again and again, it's important to keep your business documents up to date, right? That includes your business financials, right? And I also think that, that information is just important to have as a business owner. That's keeping, your finger on the pulse of your business, right? Next, we'll move into like some things that are kind of like trust land specific, especially, if your business is located on trust land. One of the big things that we see quite often come up is like business lease agreements, right? And these can be huge timing drivers. And again, it's important to keep your company info up to date. So for example, right, if you have a business lease on trust land and there's, let's say, 3 years remaining of your lease, and you think like, oh man, I have plenty of time to get this done. I have 3 years. I don't need to go out there and get my lease renewed right now. But then you get a big order in, and now you need to purchase a new piece of equipment, right? And that you would like to get a loan with a 5-year term to purchase this equipment. But then when you provide your business lease, the bank realizes that, well, you only have 3 years left of this business lease. So we're going to require you to get a renewed lease to extend at least past that 5-year mark that we're going to be financing that equipment, right? And depending on the tribe, this could be a really lengthy process. Some tribes can, it's not a very high priority of theirs to get it done. They may think they have time to get it done as well, but their timeline and your timelines, aren't lining up. So it's important to kind of keep abreast of those types of those documents and knowing when your leases expire, what you're asking for, and things like that. So business lease agreements are important. Grant funding documentation as well. So you may receive some grants for your business or for your operation, and it's important to keep that documentation because sometimes that grant money can be used as part of your equity that you're requesting for. So like some of the amount that we're looking for to be kind of put in on your end, that could fulfill that requirement or part of the requirement, but some grants you can't. So it's important to keep that documentation so the bank can see and apply it if it's valid. And then for some guarantee programs and things like that, your tribal enrollment information is also going to be a requirement. So keeping that on hand and keeping that up to date as well. Don't let your tribal cards go expired. It's happened to me.
Or else you're not native anymore.
Yeah.
Just kidding.
I got to pay taxes at the convenience store. No, just kidding. And then lastly, I just want to quickly talk about like some ownership information, right? So any individual who has like a 20% or more ownership of your business, we're going to be required to run their credit score, right? They're going to need to provide a personal financial statement. We're going to look at their personal taxes just the same, and they will be required to be a personal guarantor for the loan, right? And that means that they are personally liable for the debt in the event of a default. But I would like to add that in most cases that, we don't require a pledge of personal property, and there are some guarantees that do. And that's kind of like a discussion that will take place, depending on the guarantee program that is going to be utilized in that instance. But so those are just some things to think about as far as who all has ownership in the business and what they may be required to provide. All right. Now I know everyone's excited for this. Government guarantees, right? This is why everyone showed up today. I'm kidding. We utilize, I would say, majority of the government guarantee programs that are available. And we are very knowledgeable on the various requirements and like stipulations and caveats of the different programs. And we utilize these things to help us provide the most assistance that we can to our customers, right? And so next, we would just like to kind of address some of the details involved with some of these guarantee programs. Now, there's generally a lot of confusion surrounding what a government guarantee is, what does it do, and how it works, right? So, for example, I get a lot of people sometimes who maybe reach out and they think that this 90%, like let's say like a 90% guarantee from a government program applies to them like directly, right? But this actually applies to the bank or the financing institution, right? And these percentages are percentages that is like considered like a backstop, maybe a safety net, to provide the bank with some reassurance in the event of like we were saying, like a collateral shortfall or a deficiency. So that certainly applies to the bank itself. These guarantee programs, though, they're designed to help fill those gaps, right? They're helping to bridge those gaps that some businesses may be lacking, like we were talking before. Maybe you're lacking operating history, right? So you're a new startup, you've only been around for a year or two. Maybe located on trust land, right? And it's difficult to collateralize your equipment or your property or whatever that's located on trust land, right? So you may be under collateralized. And so these guarantees will help banks get more comfortable with these factors that in general just increase risk, right? And there's a number of different guarantee programs that exist out there, right? So, and each program is designed for a different purpose. And so they all have, different rules, different caveats and things like that. And it's our job to really kind of understand those processes, those intricacies of each of those ones, right? Because we want to try to pair our potential borrowers with the program that best will fit their needs, right? For instance, like some of the guarantee programs will cover things like goodwill, right? The purchase of goodwill or working capital or acquisitions, but some won't, right? And it all depends on where the business is located, what its purpose is, and things like that. But Veronica will kind of get more into the finer details of the programs that we kind of work with.
Perfect. Thanks, Des. So you'll see on this page, there's a lot of information. What we wanted to do here towards the end of our presentation is really give some high level but specific details related to some of the common guarantee programs that are available for small business owners and small business owners located on or off the res. And when we talk about trust status land, that just means you're on the res or, you're on res. It's kind of like the professional term. And if we say fee simple, that means you're just in normal property, not on the res. But there are 3 different government guarantee programs I want to talk about and sort of highlight for you all to give you sort of just this baseline knowledge of what could be out there for you and give you maybe an idea of if these are some of the programs you could qualify for whenever you're looking to obtain financing. You can always, when you're going to a bank, you can let them know, hey, I'm interested in a USDA loan. Hey, I'm interested in an SBA loan. And it's really important for you to make that information or that fact known because not a lot of banks operate utilizing these guarantee programs. So they may try to be like, oh, we don't do that, but we'll give you, like a normal loan, or they'll figure out, oh, we can't give you a normal loan because you're located on the res. So it's really, this information is just to dip your toes in the water if you don't know a lot about this information. But if you do and you have, more detailed specific questions, or even if you just have questions about what we have on here, like feel free to ask us. Des and I can help answer anything right now. So I'm going to start with this first column over here, which is the Indian Loan Guarantee Program, ILGP. It's most commonly referred to as the BIA Guarantee Program, and it's a 90% guarantee to the bank for small businesses. The parameters of this program this one is very native specific. So the company has to have at least 51% minimum native ownership, and you have to be a member of a federally recognized tribe. The other parameter that's very specific for this is you have to be located, your business has to be located on or near the reservation or the statistical area that Des mentioned. Or sometimes we can make the case, let's say if you're located in Denver, but your business impacts, Southern Ute or Ute Mountain down in Colorado, like they're 80% of your customers. In some cases, we can make that argument to the BIA to have you qualify for this program, even though you're not located on res or near the res. In Colorado, we only have 2 reservations recognized by the state, which is Ute and Southern Ute. And so they're, really far down in the Four Corners area. So those are very native specific parameters. And then the types of loans that the guarantee programs, and this is pretty similar for all of the guarantee programs. As you can see, I'm just going to go into a little bit more detail for this first section, but The guarantee programs sometimes limit what type of loan products they will guarantee or cover. So with the BIA, you can take a term loan that qualifies. So term loans are just like year specific loans. They're like 3 years, 5 years, 7 years, 10 years, 20-year loans. Anytime you hear the term loan, it just means it's a defined term loan, and it's usually a fixed principal and interest payment. So during that term, if you have a fixed rate, you'll be paying the same loan every month. And then it also covers revolving lines of credits. Sometimes you'll hear this referred to as RLOCs, and it's just the RLOC. And these are just like lines of credit. They're similar. You can think of it in a way to like a credit card, but usually for a line of credit, it has better terms. It can be, it's kind of term specific. They're annual lines of credit that have like 3 or 4 renewal options. So technically it's a 4-year line of credit if you still qualify at each review period. So that's covered under the guarantee program. You can take out a permanent working capital loan, a regular working capital loan. The BIA covers construction loans. So let's say if you were interested in building a C-store on the res, some guarantee programs don't allow construction loans, but this one does. So during the construction process or during the construction term, we would have the benefit of having that loan guaranteed by the BIA. And then once it converts to, let's say construction is done, then it'll convert to a permanent loan, which means it'll just then go out to like the 20 years or 25 years in that case. And the BIA will cover that conversion to the permanent. And then it also covers like commercial real estate loans. So let's say if you were, instead of building the C-store, you wanted to purchase a C-store from someone. And that would just be like a commercial real estate acquisition. This guarantee program covers that as well as a loan type. So the loan sizes, I want to put just a disclaimer out there. These loan sizes are specific to us at NAB. If you go to a different CDFI, maybe in like Arizona or New Mexico, their loan sizes for the guarantee programs could be smaller. For us, we don't do micro lending. So we only, like a small loan for us is at the minimum of $100,000. So the loan sizes for the BIA guarantee are 100,000 up to upwards of 20 million. The guarantee programs are capped based on the funding they receive for each of their fiscal years. So there's really not necessarily a loan per loan cap. It's just an overall like bucket of budget that they are allocated each year. And until the loans they approve deplete that budget, then, that's when funding for the program is not available anymore for the fiscal year, and we'll have to wait for the next fiscal year to get approval. For the past several years, the BIA has been always operating at fully maximizing their guarantee program. They usually run out at towards the end of their fiscal year. So that's also just something, keep in the back of your head. The next thing is the equity requirements. So I want to take a little bit of time just to talk about what do bankers mean when we're talking about equity requirements. What does 20% minimum equity mean? So the minimum equity requirements in most cases for several of these guarantee programs can be measured in a couple of ways. If you have an operating business for maybe like 2 or 3 years, you can satisfy this equity requirement with the BIA looking at your balance sheet. And the way that we measure that is taking a look at your retained earnings. So let's say you are operating your business and every year you generate net income. What you do with that net income really can impact your retained earnings and your ownership equity. So if you're like operating a really strong business, all that net income, it goes right back into the business. You're reinvesting it in your business. You're purchasing more assets. You're keeping it in cash. You put it in CDs, all of that will then flow down into the retained earnings section of your balance sheet. And it really demonstrates the equity available inside the business itself. So let's say you do the opposite. You are a small business owner and you're generating all this income at the end of the year when you're filing your taxes, or like even quarterly, but then you're just taking distributions or you're taking payments to yourself. That really is not investing those funds back into the business. You're taking it out of the business. So there's really no buildup of equity within the business. And we're going to see that on the balance sheet when there's little to no owner's equity. So really keeping that in mind will help you when you're going to financing to determine if you need to bring actual cash to the table, or if there's already enough equity built up into your business that you don't have to bring cash to the table. So let's say an example of a financing request. Let's say you want to buy a piece of equipment for $100,000. You come to me and Des and you ask for a loan, and we can say, okay, let's look at your balance sheet. If we're going to use the BIA guarantee program, they have a 20% minimum equity. Oh, they have 22% equity. Great, we can finance the $100,000 equipment purchase without asking you to bring any money to the table. But let's say there's a flip side. Let's say there's no equity, very extreme case. There's no equity in the business, but you're asking for the same amount of a $100,000. So we say, okay, you actually don't have equity in your business. So we can give you a loan for $80,000, but you're going to have to bring to the closing table $20,000 of your own money. Can't be debt related money. So you can't go out and get a separate loan for $20,000 and say, hey, here's my equity, because we won't accept that as equity. So it would have to be funds from the business, however you get the funds personally. Could get a little murky, but we could talk about that if you have questions. But in that case, you would have to bring $20,000 to closing to purchase that equipment. So it can really impact, a significant amount of money. Usually, in most cases, when we deal with small business owners, that's the one sort of hurdle that they're just not able to make because of that equity requirement. And it's not only the guarantee programs that will have this requirement, it's really financial institutions will have minimums as well. Usually 20 is the maximum standard, I would say. So that's really, really common out there. So that's kind of getting a little bit technical. So if you have any questions about that, feel free to ask. I can clarify as much as possible. But that's how equity works and how we measure equity. And then for the fees, all of the guarantee programs come with fees. So depending on the product will impact the type of fee that you'll be charged to the guarantee program. The BIA has two separate programs. One is an insurance program, which is really geared for smaller loan products. It's anything that's $250,000 and below. They can utilize that insurance product, and that comes with a 1% fee. Anything $250,000 and above, or if you just don't want to use the insurance product and you want the full guarantee program, then that's a 2% fee to utilize that guarantee program. So the next option I want to talk about is the USDA. So the USDA has several guarantee programs. They, operate in a lot of spaces, but the most common ones that we see utilized in Indian country is the business and industry, which is the BNI. And then the other one is the community facilities, which is a CF. So both of these programs are heavily utilized, very specific on what they can guarantee. Business and industry is usually a majority of the businesses out there. Community facilities are very specific to, like, if you're going to build a new health center, a community center, projects that are very community driven, not necessarily like your convenience store or gas station. It wouldn't qualify for CF. With the USDA, they don't have any minimum native ownership requirements. They only have a major requirement related to being located in a rural area. So your project has to be located in a rural area. And I want to say the population max that they define for rural areas are 50,000 and below. So if you're in an urban area, let's say like you're located in Phoenix, or the property you want to purchase is in Phoenix, it wouldn't qualify for the USDA program because it wouldn't meet the rural area requirement. The great thing about the USDA programs is trust land is eligible. So they play really nice with working with business site leases, whether that's between like a tribal enterprise or with the tribe itself. So that's really great about the USDA. And then if we go to the loan types, they cover a lot of the similar loans. There are a few exclusions that should be noted. They don't do lines of credit. So if you needed an RLOC, you wouldn't qualify for a USDA guarantee. If you're acquiring a business and there's a portion of that acquisition related to goodwill, they don't allow goodwill financing, so you wouldn't utilize the USDA guarantee. And then they also have exclusions for business industries. So like they don't qualify like for using for like casinos or liquor stores or tobacco, kind of sort of like similar, companies that are in that group, they're not allowed to utilize the guarantee program. I would say that's kind of maybe common across all of the guarantee programs. So maybe just also keep that in mind if you're operating in that type of industry and looking to utilize a guarantee, it might not be eligible. But your lender should know that and can answer that question straight away. A similar loan size requirement for the USDA is starting again at 100, which is our minimum, and then up to 30 million plus. Surprisingly, the USDA this past fiscal year, fully utilized their entire budget allocation, which is not very common, but it just really is indicative of sort of the activity out there with, everyone just financing different projects across the country. What are the benefits, differences of getting a common guarantee program loan than other loans that are not backed by a guarantee program? For example, lowest interest rate, lower equity requirements, lower fees. Great question. So if you were going to get a conventional loan, which is a loan that is just a normal loan, no guarantee backed, it would be a little bit more competitive because there's a lot of things that would impact that. For sure, you would have lower fees because you're not paying any fees to the guarantee agency, which could reduce, the 1% or 2% or however many percent. And you would only be paying the fee to the bank because us at Native American Bank, we have a 1% flat fee across all of our loans. So you're paying that to us too, and it's financeable inside of the loan. Depending on the equity, you could have similar, if you have equity in your business, if you're doing a conventional loan, you could not be required to bring additional equity to the table. It also depends on what you're utilizing as collateral. And if there's sufficient collateral that meets the policy limits of the bank, then you wouldn't be required to bring any additional money to the closing table. And then lower interest rates. I would say if it's on a conventional basis, it could be a little bit lower because especially if you have a strong operating company and you have like demonstrated that over years, you have a really strong balance sheet, you should get a really competitive rate from the financing institution. Usually the reason, and Des mentioned this before, the reason guarantee programs are here are to help really small business owners who are in the beginning stages of their business life cycle, who don't have collateral, and those impact the rates that lenders will offer you. If it's a little bit more risky, your rates are going to be a little bit higher because we're offsetting, the risk that we're taking on to give you a loan by increasing the rate that we're offering. So in conventional loan terms, it should be more competitive than if you were getting quotes from a guarantee program. Great question. Okay, going back to the USDA equity requirements. So the equity requirements are a little bit different depending on which guarantee program you use and how many years of operating history you have for your business, and it's specific to the USDA. If you have 3 years or more operating history, you can have as little as like 5% down minimum equity requirement. If you're a newer business, you would be required to demonstrate 20% or more. They measure equity the same way that I noted in BIA. So it'll be balance sheet equity or bringing cash to the table equity if you don't have that. The fees are really competitive actually with the USDA guarantee programs because normally the USDA fee is 3%. But if your business is located on the res, on trust status land, the lenders should request that the fee be reduced to 1%. So when you're comparing the fee just on a fee basis for the USDA and the BIA, the USDA is actually a little bit more competitive because your normal fee for the BIA is 2% and this could potentially be 1%. So it could be a bit of significant money if you're looking into like larger loan sizes. The other thing, and this actually goes into, the lower interest rate question. So the USDA actually charges an annual fee in order to utilize their guarantee program. And this annual fee is passed down to the borrower. So this is 50 basis points. Basis points is when we use that word when we're measuring 1 unit of a percentage point, or one unit of a percent. So this is 0.50%, which is 50 basis points. It's less than 1%. But this annual fee, lenders will bake this into the interest rate they're quoting you if you're using a USDA guarantee program, because we'll take this fee every year out of what you paid us every month to then pay that fee to the USDA on your behalf. So in this situation, this rate would be a little bit higher if you were going to compare what you were offered if you just went conventionally. Next, we are going to move to the SBA program. So again, SBA has a wide variety of guarantee programs that they offer. Two of the most common ones that we utilize all the time are the 7A loan product and the 504 loan product. Again, there's no native requirement for this guarantee program. And the major thing that kind of excludes this program from Indian country is it's only able to play nice if it's fee simple land, meaning you can't have a business site lease, you can't mostly be located on the res, you have to own the land fee simple, which means just non-trust, non-res. We have done 7A loans for equipment purchases I actually have a Navajo owned business right now that we're getting ready to close the loan soon for a 7A SBA guarantee loan. And it's because he is just purchasing equipment. And so we're utilizing that equipment as collateral. We're not taking anything related to property or land as collateral for that business owner. So we can actually use the SBA 7A program. And he actually operates out of a leased building from a Navajo enterprise. So SBA can be done on, I should clarify, 7A can be done on res, 504 cannot. 504 is very specific to real estate acquisitions. So can be done, it's pretty rare. Loan types offered, all similar loans that I mentioned with the BIA, pretty much everything can be covered here under the SBA. Loan size, again, minimum 100,000. There's actually a specific dollar amount cap with the SBA. At any given point, borrower and affiliated companies are maxed at having SBA guaranteed loans up to 5 million. So you can have multiple SBA loans through multiple businesses that you own, but in total, it will be capped at 5 million and you can't use the program anymore after that. Really important note to have. And then on the equity side, again, it depends on the guarantee program, but they can go down to as low as 10% minimum equity up to 20%. If you're 504, it will be required to be cash equity. They don't measure equity on the balance sheet for the 504 program. 7A, we can measure based on balance sheet. So again, like I mentioned, a lot of nuances, a lot of like specific things to make note of. The fees on this, it's a tiered fee process or program with the SBA. So depending on the loan size, it can be 0% fee right now. And then all the way up to 3.7. 0.75%. And then this one also comes with an annual fee. And this is only for the 7-day guarantee program. So it'll work exactly the way I described for the USDA. This 55 basis point fee will be added and bumped into your APR or interest rate that's quoted from the bank. And then we'll collect those funds with your payment every month and send that to the SBA on your behalf at year end. So a lot of information, a lot of information. I hope my hope is just to give you this taste to hear it once, so that if you hear it again, it maybe like will ring a bell. It might sound a little bit familiar. If you have any questions, you know, Des and I are always available. We can help answer anything. We utilize all of these guaranteed products every day, every single day. So we know pretty much everything. And if we don't know, then we have our bosses who know even more than we do. So there's always someone to answer a question. So with that, that concludes what we wanted to present to the group today, and wanted to also leave you with our contact information. The phone number is the general phone line to the bank. You know, can reach out to the lending team with the email address. If you send an email to this email address, Des and I will get those emails. Please visit our website. We have a lot of information there. We have a lot of free resources. One of the things that we have out there is a financial education tool. There's really cool, like these quick little 3 to 5 minute videos talking about credit, anything you'd like to know about banking. It's all free of charge out there on our website. And then you'll just get to see, you know, the other thing that we didn't really talk about too is we're also a deposit bank. If you want to support our mission, if you want to make an impact in Indian country, you know, every dollar that you deposit with us, most of that dollar goes back into Indian country through the lending that we do. So it's, you know, making sure that you're also impacting the work in Indian country with the bank that you're utilizing. If you have any questions, feel free to reach out to us. I think we still have a few, like 4 minutes. Ask us some easy questions. Just kidding. Des, is there anything you want to? Oh, thank you, Arlene. I'm glad you found the information helpful. Des, is there anything you want to just say?
Yeah, I just wanted to thank everyone here for your attendance and your attention, and for allowing us to, you know, kind of impart some of our knowledge and experience with you guys. I wanted to thank you all for being, you know, Native entrepreneurs. It's a challenging, tough, and, you know, rewarding process. And I think that having Native representation in the business world is important. So I thank you all, and I applaud you all for all the work that you guys are doing. We want to see you all succeed, you know, as much as you guys want to succeed as well. And so we want to be a resource here for you, you know, to reach out to. So again, thank you for all the work that you guys do, and for your time and attention today.
Nicely said, Des. Raquel, I guess we can turn it back over to you.
I do have a little more information to share, but thank you to Veronica and Desmond and Native American Bank for being here and agreeing to share all this information. It's going to be very, very valuable, and will be available on our YouTube channel for all to see and share as well with your network, and if you want to rewatch any of the information that was shared as well. Tim is actually one of our business coaches, Veronica and Desmond, and then we also have one of our newest business coaches, Holly Patterson, here with us. And then I think that's all we have right now. Sometimes there's more Change Lab staffs on there, and they like to say hi to everybody every once in a while. But for our audience members, thank you all for being here. Oh, there's Holly. Thank you for all your questions and your participation. If you missed any part of Veronica and Desmond's presentation, Change Labs will have this session posted to our YouTube channel very soon. And then if you missed any part of my presentation at the beginning, or if I spoke too fast, I know I'm guilty of rambling through and not taking a pause for people to actually comprehend. That's actually going to be available on the YouTube video as well, or you can send me an email. My email is raquel@nativestartup.org. And then if you have any questions as far as Change Labs services, I'm available for those as well. And then lastly, I want to announce our next workshop. We have Goldie Tom on Wednesday, November 2nd at 11:30 a.m. Mountain Daylight Time. She's a licensed cosmetologist and salon owner. She happens to also be one of Change Lab's current cohort members in the incubator program. And in this workshop, Goldie will be sharing her entrepreneurial journey from her start and then leading up to her trailblazing life. Like, she has accomplished a lot, and all her accomplishments are very, very impressive. But I'll leave all that information for her to share on the 2nd. I'll have that registration link up very soon as well. And it'll be at the nativestartup.org/events link. And then that's all I have. Thank you, everyone. I look forward to seeing you all in a couple of weeks again. And thank you again, Veronica and Desmond. It was a lot of information, but I enjoyed learning all of it.
Thank you. Go ahead, everyone.